Rahul Arora, CEO of Nirmal Bang Institutional Equities, with us. Rahul, welcome. It's still a couple of minutes to noon, so I'm still going to say good morning, hoping that the afternoon will be better. But is that too much of a hope at this stage as far as the markets are concerned?
Morning, Siddharth. Thank you for having me on. And you notice to your response of good morning, I just said morning. I took the good out of it. But that being said, I think obviously, the movie hasn't played out as the trailer was shown to us over the weekend. But Siddharth, I think I'm going to probably tell you something that maybe nobody else on your channel has, told you so far. And I think this is a larger point. And Siddharth, I think you and I at one point, probably just crossed each other at Bloomberg UTV a long time back.
Yes.
And, I know you're very well connected to policymakers. I think this is a point to be taken home. Could the election have not ended a day earlier instead of Saturday on Friday? And could the election results have not been announced yesterday instead of today? Yeah, allowing the markets to go up on an exit poll yesterday and allowing them to fall today. I'm not saying that anyone knew the election outcome, but why gamble or why, keep that window open for the public to be subject to such volatility? I think it is utter senselessness. This could have been better managed so that you did not have to, go through this exuberance. Because I'll tell you, Siddharth, even though my business is institutions and I only deal with large institutional investors, there were so many people who called me yesterday between my family and friends saying, यार कल तो इतना बढ़ गया, कल भी इतना ही बढ़ेगा क्या? And I'm like, I don't know, but the mindset had become so exuberant after yesterday that today nobody is able to come to task. So wrap their head around the fact that this has actually happened. Now, as you were introducing me, I was looking at the Election Commission website, and they have put out their 543 tally, and it shows the BJP at 235. Now, even if you assume that the allies get 50-60, you're talking about the NDA being in a very slim majority. Now, obviously, this is not good from a market perspective. Now, the question is, what sort of a budget does the government of India present when it presents it? Is it going to be more populist? If it is populist, what happens to the fiscal deficit? Let's not forget, Siddharth, that one of the states that has cost the BJP in this election is Maharashtra, and that goes into a state election in 4 months. So I think there's going to be a lot of questions they're going to have to grapple in the next 4 to 6 hours. But my simple one-line advice to your viewers, do not catch a falling knife. Let the dust settle. थोड़ा बढ़ेगा, आके खरीद लेंगे. आज खरीद के हीरो बनने की कोई जरूरत नहीं है. Let it settle. Nobody is going anywhere. We are here. The market is here. You are here. We can buy it a day or two later after the dust settles. There's no need to catch a falling knife.
I'm going to request our producers to immediately snap that very, very important comment from you, Rahul, and put it on all the social media platforms where we have a very significant lead. At least that's one lead that we can talk about very confidently. And with the thumb, Rahul Arora says, don't try and catch a falling knife, because this is very, very sensible advice at this point of time, especially to those investors who might be trying to buy the dip. Rahul, you touched upon several points, and before I hand it to Sakshi, I just want to respond to the first point that you made in terms of the results day, exit polls day, the election final day. Chief Election Commissioner Rajiv Kumar, who used to be the banking secretary earlier, said that one of his key learnings of the commission had been that this election should have ended 1 month earlier. So the election commission, and they say that because of the extensive exercise for providing security across this country, after all, we have almost 970 million eligible voters, and that cost them, and there was a mistake, very clearly in their words, that happened as far as timing. On the second part, I can pretty much guarantee that none of the people in the commission would have even thought of this important point that you made, Rahul. And as a former journalist, as one of the best known analysts now, you hit it right on the head that perhaps in an India where millions of first timers have come to the stock market, and the stock market is no longer a bastion just for some elite people, it's now spread across. The market culture has spread across, and all the participants are also Indians. They are also part of this country, and just as people pay so much attention to caste and combinations, market investors are also in some ways, in inverted commas, a caste of their own. One more quick point, Rahul, and since you sort of were bang on as a former journalist, you have the ability to capture the headline straight away. The focus will now shift on how the policy agenda and policy expectations will be reset, and the occasion for that will now be the budget. Remember, the government has been consistently pumping up the 100-day agenda, the 125-day agenda, but this alliance, if these are to be the numbers, like you said, is not only going to have a slim majority. Remember, a significant part of the BJP plus the alliance contribution to this NDA, Rahul, is perhaps going to be of two recent allies. And I wonder, and we will get political experts to answer that question later on, I wonder whether those allies will be as sticky as some of the older allies have been with the BJP. And over the past 10 years, Rahul, the BJP's record of retaining allies, just as companies are under have to retain talent, the BJP's record of retaining allies and keeping them happy hasn't been the very best. So, Rahul, you are absolutely spot on. These are some of the key concerns that the market has to address. But Sakshi, let's get Rahul in on specific market metrics.
Absolutely, Siddharth. And Rahul pointed out something very important, which you've also reiterated. That brings me to one question up front for Rahul. We've actually seen, newer demat accounts, fresh entry of these investors over the last 3 years. This probably is the first instance that these first timers are seeing such a sharp fall in the market, something that they have no experience about. Will this lead to an outflow of the retail money, something which has held on the Indian markets up to the brim so far?
See, Sakshi, I think one thing is for clear. Most of the selling that has happened today is going to be from the domestics, right? I think they were the net positives. There were a lot of short positions in the market going into this event. A third of them got covered up yesterday, but I think 2/3 of them were still left naked open. And I think that's probably got added on to today. So I think those are two aspects. I think you've raised a very pertinent point. The generation of investors between the ages of, say, 18 to 25 that have come into the Indian equity markets, say, post-demonetization or even post-COVID, have not seen something like this. How will they adapt to it? How will they absorb it? That remains to be seen. I think it's almost like, introducing a new iPhone every year and saying, okay, let's test the market on how far, the acceptability is in the youth. This is something very similar. Will this have an impact on SIPs? See, Sakshi, I think let's just keep a very stable mind about it. I think, as Indians, we get too pessimistic sometimes and too carried away. We still don't know who's going to form the next government, what the shape is going to be, and who the Prime Minister of India is going to be. Let's just take this on fact. An election is still underway that is still counting on. That process will find its due course by the end of the day. And I think that will determine the future course of action. And I think my sense is, if you do have the current Prime Minister at the top of the affairs, I don't think there will be too much downside from here. Let me be very clear about that. We could go into a time-wise correction, as Siddharth was earlier pointing out. Allies may not be sticky. That's not my area of expertise. They may be, they may not be. But if by some metric, if the current Prime Minister is able to continue, I think the budget may tilt towards populism. And the reason I say that is I think it would have come as a huge shock to the Bharatiya Janata Party to not even reach the halfway mark in Uttar Pradesh. And we've seen the kind of openings that have happened in January and the kind of fanfare around that. Despite that, you were not able to reach the halfway mark. So there is something happening in the rural economy that you and I sitting in Lower Parel in Bombay are not able to gather. So I think to that extent, we need to understand that Bharat is thinking a little differently from India right now. And to that extent, I think it could be a slightly more populist kind of a budget. My only, thought process, Sakshi, is that it does not lead to a substantial slippage in the fiscal deficit. Now, just allow me 30 seconds more. I think what the government of India, regardless of the shape or form that it takes, what does it have going for itself? There is a lot of things going right for India right now. First, your GDP growth is 7.5%, 8%. Second, your inflation is under control. Third, you are standing on the doorstep of a rate cut. Fourth, the IMD and the SkyMet has predicted a normal monsoon. Fifth, and most importantly, crude is under 80. Your currency is stable. I think this is a remarkable number of things that are going right for the Indian economy right now, regardless of who was to take the reins from here. So I think let's be optimistic. Uh, Whatever happens, the market is going to rise from here. It will double over a period of time. Let's not time it, but keep the faith. I think whichever way, shape, or form the government takes, it's going to move in the right direction. And I think we need to endorse the fact that India has a lot of things that are going right for it as on today, which a lot of countries in the world don't have, including the United States, which goes into elections in 6 months, mind you. Their GDP growth rate is also slowing down. So if I'm a foreign investor, I'm like, भाई अगर इंडिया 7.5-8% ग्रो कर रहा है, मैं वहां पैसा क्यों नहीं लगाऊं? I need a compelling reason why not to be in India. As you know, the former Prime Minister of India, Atal Bihari Vajpayee, said in one of his most famous speeches in Parliament, पार्टियां आएंगी, पार्टियां जाएंगी, सत्य आएंगे, सत्य जाएंगी. ये देश रहना चाहिए, देश का लोकतंत्र रहना चाहिए, देश के देशवासी रहना चाहिए.
Very important point there, and since you spoke about foreign investors and India's growth, I want to ask you in the more near term today, in the afternoon, what do you expect FIIs to do? Because we've seen the kind of bets they have placed and we saw what happened yesterday. Are they going to sort of sell it off and bring the index under further pressure before close?
You know, Siddharth, they've got India so wrong that I almost empathize with them. I think, you know, the way the Indian market has gone, I mean, why would you sell a market where you're seeing domestics invest? I mean, it's quite something, right? Like, it's like today, if I see Infosys or TCS or HDFC Bank or Hindustan Lever doing a buyback, and the company buying back its shares, but I'm selling the shares. You know, it's like, ye kahan ka logic? So I don't understand what their thought process is. Now even the rating agencies are upgrading us. You know, they've had a hostile view towards us. Even they are upgrading us, and these guys still don't want to come. मत आओ यार. You know, 7,500 से 25,000 हम अपने दम पे ले गए थे. यहीं से यहाँ से भी आगे ले जाएंगे. आपको बेचना है, बेचिए. बेचे कहाँ जाएंगे आप? You know, which other emerging market is giving you the kind of demographics that we are, and the points I was raising with Sakshi a little earlier in terms of our macros. Who is giving you all of this? I think it's very, very few countries in the world that can compare to us. And, you know, let them sell if they have to. Yeah. I think, you know, we are at 60 lakh crores of the mutual fund industry. Almost 50% of that is equity. We'll absorb it. We'll absorb it. Let them come, let them sell. We'll absorb it.
Investors, including MF investors, retain the faith in the changed circumstances? And while you answer that, the VIX again all over the place. I just saw it go back into the mid 30s. Now it's close to 42. So the market remains volatile. But will domestics retain the faith, including the younger lot, Rahul?
I think so, Siddharth, because I think if you look at fixed deposits, right, it's not a great place to invest. Gold, I don't know. Real estate, I don't know. So when you look at a compounding story over a period of time, equities just tend to outperform. And I think historically, if you take an average, long-term period averages, I think you'll see that equities outperform. I mean, you know, I started my career in the early 2000s. We've seen many changes of government in India and the US, and look at where both the markets are sitting today. Sectors change, enterprises change, the operating environment of companies change. But, you know, countries that are investing in the right things, look, nobody is going to reverse policy. Government is about continuity, right? And you have to continue. Now, can you say that India will go back to a cash economy and not be digital if the government changes? Obviously, that's not going to happen. Can you say that solar and hydrogen and all of that is not going to happen? I mean, you've embarked on that journey. Investments are made. Capital has been deployed. So, you know, continuity is going to happen. So I don't think it's going to be that much of a problem. Yes, it can test patience for the short term, and it should, because I think money making, Siddharth, had become too easy in this market. Let's face it, as Sakshi was also pointing earlier, that nobody has seen a correction like this in the last few years. And it had just become too easy to make money. So it's good to have these days just to remind people that, you know, no matter how healthy the body is, you can fall sick from time to time. So absorb it, take your medication, move on.
21,500, that is what I saw on the Nifty right now, Rahul, and what we've seen is that 5,300 points of a cut on the Sensex, 71,120. The kind of fall that we are seeing is, perhaps I've not seen it in recent memory, 4,600 points gone on the Nifty Bank as well. It is indeed a sharp fall, 18% down on the Nifty PSE index, viewers. That's the kind of fall that you are seeing. looking at these levels in hindsight, you're already talking about, Rahul, that come what may, let this result settle down. In future, we will see the Nifty double from these levels. Are these attractive valuations for you? 17% down on certain indices, or is this going to go down even further? Excesses are still supposed to get out of this market.
Well, I'd certainly look at PSU banks, Sakshi, for sure. I think I would start nibbling into PSU banks today. I would not touch defense stocks. I would want defense stocks to go down, honestly. I mean, and it's one of the biggest sectors we've been overweight on. But when I look at valuations, I'd be comfortable if they fall another 20-30%. In fact, I'd be very happy if they do, because, it gives people an opportunity to enter, people who have missed out because valuations had become obnoxiously expensive in that sector. I think in certain manufacturing related pockets, when you talk about second and third order, I don't want to name specific stocks, but you may have a gist of what I'm talking about, where valuations had gone to 45, 50 times because they had applied for PLI schemes, or they were subcontracting for global OEMs. I think those sort of need to realign themselves. So I think there is a case for some of these stocks to fall 20-25% more. Now, whether they fall on this election outcome or whether they fall on results, that's another academic discussion. But I'd be more comfortable specifically on defense stocks falling a little bit more. And not just defense. I think most public sector enterprises, ex-PSU banks, let me put it that way. That would be the one sort of the way I would describe it. Public sector enterprises, ex-public sector banks could potentially be more attractive, 20-25% lower from here.
But Rahul, you spoke about the macro. Now, in terms of the macro, we saw a post-COVID strategy of the government which said, no, let's go for capital expenditure, let's build up assets, let's not throw money away because that will impact inflation. And government managers used to brief many of us journalists and say, the whole world got it wrong post-COVID and that's why they are seeing inflation. You think that theory and that practice will now come under test? Because if it is a NDA-led government, July will be now a pivotal moment both for the market narrative and for the broader political economy narrative.
No, I don't think inflation is going to go out of hand, basis any populist, measures, to be very honest. I think even if you are trying to put money in the hands of people, it's going to be a very restricted amount. And I think this government in the past has shown a resolve not to make, India a very dependent economy. If anything, they've cut down on urea subsidies, fertilizer subsidies, so many things. I mean, the way they've gone about their entire business on oil and gas, with the way they've looked at CNG and PNG and LNG prices. So I don't see a major detour from that, maybe on a case-to-case basis when you have state elections around the corner, because now what happens, Siddharth, with this mandate, states become more powerful. Let's be very clear about that, right? So earlier it was the center that was dominating the states. Now it's going to be a virtually 50-50 kind of, equation. So you may have, a little bit of tweaking on a case-to-case basis, but India's inflation, Siddharth, has always been a supply side issue. It's either been because water has not been enough from the skies, or because we've not had enough water in the reservoirs from below the ground. So I think if you're able to, have the crop harvested and enough supplies come into the mandis, I think you should be able to, control inflation, because it's generally fruits and vegetables that goes out of whack. Very rarely will you find India in a situation like the United States, where housing is, giving you inflationary concerns, or, you have demands for luxury goods that are giving you inflationary concerns. I don't think that's by and large an issue. So I think to a large extent, Siddharth, that's played itself out. If you look at the commentary of the consumer companies after the Q4 results, whether it's Lever, Tata Consumer, ITC, Godrej, so many of them, Dabur, have come out and said that green shoots are visible in the rural economy. So, maybe things are turning around. So I wouldn't be too worried about inflation. I think, we're well on track for an interest rate cut maybe around Diwali this year. And if we're lucky, we probably get 50 basis points in this fiscal year.
One quick point, Rahul, since you spoke about recent Q4 results, given the overall sense that you have got from the recent quarterly performance, what do you expect as far as earnings growth is concerned in the current quarter and maybe one more?
I think the best of the earnings growth is behind us, Siddharth. I think the top line has to drive it. To a large extent, margin expansion is, taken care of. I think companies have expanded their margins very well from the lows of COVID. Like I said, crude is around 80, but it's been stable there. So I think it's going to be top line that drives it. The one disconcerting part, Siddharth, was that at our brokerage, and I think if you speak to most larger broking houses, some of our senior competitors in the market also, they'll probably tell you the same thing, that on aggregate the downgrades were more than the upgrades. So to that extent, I think if top line growth revives in a material way, earnings growth would be okay. But I think it would be prudent to work with something like a 12, 13 to max 15% kind of earnings growth over the next 2 years in terms of compounded. I think there will be companies that will probably grow at 8, 10%. They will be at 20, but at an aggregate level, let's say 13 to 15% would be a number I would work.
Okay. Rahul, another important factor that we've not discussed, the mid and the small caps. I wanted to come to that. You did say that excluding the PSU banking space, the runaway sectors you will avoid. The mid and the small caps have always been talked about, especially from the SEBI chairperson's point of view, that a lot of froth had built up in this space. With the kind of correction that we are seeing right now, do you see some of the excesses of the froth is now out of the system? How would you really look at the mid and the small caps from a long-term view now?
Sakshi, I think the best way to invest in mid and small caps is to invest in mid and small cap funds. I think, I really don't think we should be investing on dips and, whatever else, this often spoken about, and I'm sure you hear it in your friends and family circle, yaar koi multi-bagger idea. I think this conversation, this discourse needs to stop. And I'll tell you why, Sakshi. If you do not invest in a stock that is liquid, on days like these, you're not going to find an exit. कोई buyer सामने खड़ा नहीं होने वाला. You are going to be stuck with it. You are in quicksand. आप जितना लात मारोगे, आप उसमें उतना और घुसोगे. Best is to stay with liquid names where I know I can liquidate my position, which is basically I'm telling investors to stick with the top 250, 300 names in the Indian market, maybe top 200, 250 also, because when the time is right, at that time you don't question. You always question yourself when things are going wrong. And at that time, it's better to be sitting with a fund manager who has been through these cycles and knows what it takes to go through this cycle. You mentioned SEBI. You would know that recently SEBI mandated all mutual funds to take a liquidation exercise underway to find out how long it would take them to liquidate their mid and small cap portfolios. Were an event of the nature of today were to transpire. And those guys came back and said it would take anywhere between 15 to 30 days. Now, just imagine an individual investor who's stuck with a odd textile or packaging or I don't know, sugar or whatever stock, fertilizer stock that hardly trades. It's become 2-3x. Maybe a 100 rupee stock became 300. But if that 300 came down to 30 and he's still stuck with it, his money is gone. That was all notional value. So stick with liquid names if you are to invest directly. But I would say otherwise stick with the mid and small cap fund managers. Most of the funds today have mid and small cap funds. They are our clients. And most of these, I can tell you, Sakshi, have anywhere between 15 to 30 years of experience of having tracked these cycles. So I think I'd be far more comfortable investing that route than going in directly, especially if I was doing the illiquid route.
Right. Well, that's an important point, Rahul, and a different sort of way to add to your answer is that our producers have just informed us that the current loss of around 36 lakh crore to investors today, because yesterday was a gain of 12, is 30% more than the GDP of Pakistan. But I'm not discussing Pakistan and politics with you, but just to put some of those numbers in perspective, because a lot of people look at this. The Adani pack, Rahul, it's a roller coaster. Since Hindenburg, it's been a roller coaster of emotions, it's been a roller coaster of numbers, and in the past couple of days, it's again been a roller coaster, including today. Adani Ports, for example, down 20%. What would you tell those who are watching us, given the interest that this stock has even beyond buyers? There are people on the sidelines who just want to watch and discuss what's happening to the Adani pack. What would you tell them?
So, Siddharth, the only two names that we officially track from the entire Adani group are ACC and Ambuja. Cement is a sector we are very bullish on. I think, KK Mistry used to say that the average age of an Indian buying a house is around 35 years old for the first time. And the Prime Minister often says that 65% of India's population is under the age of 35. So just imagine how much of India has not bought their first home yet. Then you look at what's happening in terms of ports, infrastructure, and so on and so forth. So we are very bullish on the cement sector. I think eventually ACC Ambuja will converge into one entity, and the cash flows will reflect such. So I think any dips into ACC Ambuja can be looked into buying. The others we don't track, Siddharth, but since you specifically spoke about, mentioned ports, I'll just make a passing statement. The
Yep.
assets are real, the cash flows are real. You can go there and see what's happening. And I think from an institutional investor standpoint, barring ACC Ambuja, I think this would be the most well-held Adani stock in the entire portfolio. So I think on dips, you could probably go in and look at buying this name as well. Beyond that, I don't have a comment on the group or the other names because we don't research them. But I would be a solid buy on ACC and Ambuja. And as an observer, I think because I know the assets are genuine in Adani ports and the cash flows are good, and that's the feedback we get from institutional investors as well. That could also be looked at on declines.
On a side note, Sakshi, before you get back, just one quick point for our viewers and Rahul. Up north, Kashmir, big setback for Omar Abdullah and Mehbooba Mufti. Engineer Rashid is leading from Baramulla by almost 46,000 votes. And Mia Altaf is leading in Rajouri, Anantnag by 1,60,000 votes. And at this stage of the leads and the way counting happens, it's pretty difficult for a lead of this extent to be reversed. And there are some shock surprises that we are also looking at in terms of numbers from other parts of the country, including Amethi for Smriti Irani. But Sakshi, let's get back to the markets with Rahul.
Absolutely. Now, Rahul, initially you gave this very important clarification for all our viewers watching in that this is not the time to be heroes. Let things settle and buy when things settle down. Probably markets a little higher, you may not buy it at the bottom, but still you will be buying better off. What about those investors who may be wanting to selling away and going away? Because this is the time which is very, very nervous for a lot of investors. Many of the people would want to just step out and say that probably markets are not for me. This kind of a sharp fall is not good for my mental health. How would you really talk to those investors through our platform today?
If you haven't sold already, don't sell now. As simple as that. Just like I said, don't catch a falling knife. Similarly, don't just follow her. I think ऐसा हो सकता है कि आपका स्टॉक जो आपके पास पड़ा हो, like for example, अगर आपके पास SBI हुआ and SBI is down 15-20% today. Let's say in somebody's wisdom tomorrow, they decide, okay, SBI has reached good value and let's go in and buy. You would have made a bad decision selling. So the time to sell was yesterday, not today. The time to sell is when prices go higher. The time to buy is when prices go lower. You don't sell when things go lower, and you don't buy when things go high. That's as simplistically as I can put it. Wait, eventually you will make money. Yes, sometimes stocks can go into multi-year consolidations as well. I understand that it can be frustrating, but if you have that kind of a long-term horizon, wait it out. You will make money on good quality stocks eventually. A one-day market move does not change the fortunes of a good company nor its destiny.
And Rahul, this stays according to you one day or a few days, a few weeks kind of market move?
I'm sorry, Siddharth, I didn't catch that. Could you repeat your question, please?
Rahul, I was saying that, when do you see this reversing?
Oh, that's a very tough call, Siddharth. I think I'll have to don Krishna's hat to figure out what's going to happen next in the Mahabharata. But no, it's almost impossible. It's almost just wait it out. See, let it turn, Siddharth, because when it turns, it's not going to turn by 100, 200 points on the Nifty. It'll turn. We'll know it's bottomed out. There's no point catching the bottom. I mean, see, we don't know. Siddharth, when we started this conversation, I don't know if you were tracking the Nifty. It was down about 1,400 points. As I'm seeing to the right of your screen right now, it's down almost 2,000 points. That's how dynamic it is. So,
I think some sentimental factors are feeding in, Rahul. Just to interrupt you, because you mentioned the Mahabharata, let me take us to the Ramayana. The BJP's Ram card, Arun Govil, is now trailing from Meerut. He was leading earlier. One of the Gandhis, but who doesn't fight on the Congress ticket, Menika, is trailing from Sultanpur. Amritpal Singh, a radical, is by some reports well ahead in the lead when it comes to Khadur Sahib in Punjab with a big margin. So, Rahul, sentiment there, the VIX up almost 48%, and Sakshi, Perhaps a quick closing comment from Rahul before we thank him for his time with us today.
40 lakh crore rupees now wiped out from the Indian markets as far as the BSE listed stocks are concerned.